So real-world assets. You've probably heard the acronym everywhere lately, RWA. It's being pitched as the next massive thing in crypto, right? The story goes that this is the bridge that's finally going to connect the crazy, chaotic world of digital assets with the stability and sheer size of traditional finance. But what does that actually mean? Like for your wallet, for the market? Let's get into it and figure out what this bridge is all about.
Here's how we're going to break it down. First, we'll nail down what RWAs actually are. Then, we'll look at how this whole bridge is being built. We'll check out a real product, try to grasp just how massive this opportunity is, and then, and this is important, we'll weigh all that amazing promise against some pretty serious risks.
All right, let's kick things off with the most important question. What on earth are real-world assets?
I want you to just think about this for a second. What if your crypto wasn't just about hoping the price goes up? What if it could actually tap into something real and earn a steady, predictable income, almost like getting a paycheck from the real economy? That's really the core idea here.
Honestly, the concept itself is surprisingly simple. You take a real thing of value, like a government bond, a share of a building, even a business loan, and you create a digital version of it, a token, that can be bought and sold on a blockchain. It's basically a digital twin for a real-world asset. And this is a total game changer, because it can unlock the value in things that are traditionally really hard to sell.
And we're not just talking about one or two things here. The possibilities are huge. This could be something super safe, like U.S. Treasury bills, or it could be stuff like private loans to companies, fractional ownership of real estate, commodities like gold and oil, even fine art or carbon credits. Essentially, if it has value in the real world, you can probably turn it into an RWA. Okay, so that all sounds great, but before you can just go and buy a tokenized T-bill, somebody has to actually build the bridge to make it happen. And let me tell you, that is a massive job. It involves licenses, complex tech, and a whole lot of paperwork. So let's take a look at the blueprint. And this isn't just some fantasy. There are real plans in the works. This roadmap here, for example, shows a very deliberate step-by-step process for a project in this space. See how it starts? First, you launch products for the big institutions. Then, you get the legal green light to operate as a trading platform. Next, you make sure assets can move freely between different blockchains. And then, you get to the grand finale, bringing major traditional assets onto the chain. It's a marathon, not a sprint.
So that whole roadmap is really built on these 5 key areas. First, you need licenses. You've got to get permission from regulators like the SEC. Second, you have to be cross-chain, because nobody wants their assets stuck on one network. Third, you need slick compliance tools, often using AI to handle all the legal checks. Fourth, you need to expand the types of assets you offer. And finally, the goal is to move towards DAO governance, where the community eventually takes the wheel. Every single one of these steps is absolutely crucial.
Okay, so the infrastructure is being built, but how do you, the average person, actually tap into this? Well, that's where new products come in, designed to wrap up all that complexity into something you can actually use. And often, they look a lot like stablecoins, but with a twist. Let's take a look at a real example, R2 Protocol. Their whole mission is to be that simple, user-friendly front door to the world of RWAs. They take these high-end financial products, the kind usually reserved for giant hedge funds, and they bring them to DeFi for everyone, without needing $1 million to get started. And here's how they do it, which is pretty clever. They've created these tokens that are basically just a claim on the yield from these real assets. It's kind of like an ETF. You can pick the low-risk option, SR2USD, which is backed by safe U.S. Treasury bills and gives you a steady, reliable yield. Or, if you're looking for a bit more juice, you can go for SR2USD+, backed by higher-risk private loans for a much higher potential return. It's all about letting you choose your own adventure, just like in traditional finance.
Now that we see how it works on the ground, let's zoom all the way out, because we need to talk about why this is getting so much attention. And honestly, the scale of this opportunity it's almost hard to believe. So right now, the total value of all the tokenized real-world assets on-chain is somewhere around $40 billion. And hey, that's a big number. That's not nothing. But just hold that number in your head for a second.
Because the markets that RWAs are aiming for, we're talking global real estate, bonds, stocks, all of it, that market is measured in the hundreds of trillions of dollars. It's an absolutely mind-boggling amount of money. And here's the kicker. Right now, RWAs have captured less than 1% of that total market. We are at the very, very beginning of this thing. If this trend keeps going, the potential for growth is just astronomical.
But you knew there was a but, right? With that kind of opportunity comes an equal amount of risk. It is so easy to get swept up in the hype, so we have to have a serious conversation about the dangers here.
This quote from trader Eduardo Swan just says it all, doesn't it? This is not a game. Merging these two massive financial worlds is incredibly complex, and it's full of pitfalls. If you're not prepared, you can get wrecked. It's as simple as that.
So let's break down those main risks. First, regulation. It is a giant question mark. Policies can change overnight, and that creates chaos. Second, token volatility. The prices of these RWA project tokens can be an absolute roller coaster. Hype comes in, tokens get unlocked, and prices can swing wildly. Third, competition. This space is getting really crowded really fast. And finally, you always have technical risk. One tiny bug in a smart contract, one mistake in managing the actual real-world asset could be completely devastating.
So at the end of the day, this is the question we're left with. The vision is incredible. The tools and the teams to build this bridge between crypto and reality are here, and they're working on it. But is the foundation they're laying truly strong enough to handle the pressure from both sides? That is the multi-trillion-dollar question.